Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Tuesday morning pre-market webcast. Okay, hope everybody had a nice little 3-day weekend there. The trade yesterday really was your typical Globex is open for 4 hours in the morning type of holiday trade. We just kind of drifted higher. Now, they tried to push it up past 1484 quarter last night, and they got rejected. I told my subscribers last night as it was happening that from this entire rally here, this entire area, okay, that was really the first time. Arguably this might have been, but I would say that's really the first time that we have seen a out and out rejection of a new high. And when I say out and out rejection, that is we make a new high, we retreat immediately, and we retreat significantly. There was an immediate four-handle pullback, and we were back at 1480, in the blink of an eye. That's price rejection. So the bulls have got to get back up and over that price in order to demonstrate to everybody that 84 quarter is not the short-term high. Okay, I have been looking for a pullback today and tomorrow. That may happen. The bears may drop the ball again. I don't know. We're asking for the bears to do something they have been unable to do, which is to follow through and continue to press into lows. The key areas today are the 1475 area, and then you get down into the 3-day pivot, which comes in at 1473 half, down to the 9-day 1468. The bulls, obviously job one is 84 quarter. If they can get through that, they can go to work on 89. We're very overextended. We're overextended based upon the 200-day exponential moving average. We're overextended based upon the middle Bollinger Band. And whatever happens here, when these bands get blown out like this, you'll have some Elliott people, or not Elliott people, Bollinger Band people saying that we're making lower highs relative to the Bollinger Bands, which is true. Does that really make too much of a difference? Probably not. But you see, we punch the bands, touch the bands. If we roll over here, there's a big gap in the bands, right? So when I say relative to the Bollinger Bands, it's just relative to this line. We broke through the line, we came close to the line, we didn't even come close to the line, okay? But it's going to take a lot more than a 9-handle price rejection of 1484 to get this thing turned around and headed back in the direction that the bears want it to okay? But from up to the point where we hit 84, it has been way too easy to be long this market. And when it gets so easy to be long a market, that's typically when things start to turn around. Nothing significant economically today. We've got existing home sales at 10 o'clock. It's a fairly light economic week. There's really nothing to get too excited about. You got claims on Thursday, as always. Durable goods on Friday. So new home sales on Friday. So not a lot of economic bellwethers that are going to be coming in to disrupt things, and we'll have to see how some of the earnings reports go this week. But the other thing I've always told you guys is that in the absence of a catalyst, we tend to drift higher. So I still think the bears are going to need some actual bad news, and I think it's going to need to be macro news, economic type news, versus micro news versus earnings or something like that. This market's not going to roll over because Apple isn't selling enough iPhone 5s, or because Deere isn't seeing enough the way the margins are coming out for Deere. Market's not going to sell off on that stuff. Market doesn't care. Market does not care about the micro stuff. The market is focused on the global economy, and that's what will roll it over. So in the absence of that news, it's advantage bulls. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader. I'll be back tomorrow morning with another webcast, everybody. Trade them well.